I'm going to talk about gold and give you the simplest, most straightforward way to explain how you compare gold to dollars. You may see articles and hear people talk about how gold is an inflation hedge. Dollar has lost its value with relation to gold. What does that all mean? Well, I'll go into some of the specifics of compounding interest and taxes and how you can pass along things like gold and pay no taxes. But first, the most simplest, straightforward explanation is this. 100 years ago, and if you take a look at this article here from Seeking Alpha, they talk about the price of gold 100 years ago and how it was $20 an ounce. Okay, so let's just say, for sake of argument or illustration purposes, 100 years ago, you had $100 and you put it under your mattress. Or, scenario 2, you take the $100 and you go buy gold. Gold's $20 an ounce. That would be 5 ounces of gold. You take your 5 ounces of gold, shove it under the mattress. Here we are, 100 years later. What do you have? Scenario A, you pull out your $100 bill, you got $100. Scenario B, you take your 5 ounces of gold. You have 5 ounces of gold. You want to turn it back into dollars, so you go sell it. Currently, the price of gold is $2,000 an ounce. Multiply that by your 5 ounces, that's $10,000. So there you go. When you hear people talk about dollars versus gold and how gold is an inflation hedge, that's what they mean. You have the scenario of either $100 or $10,000. Gold wins. Okay, I know what you're probably thinking. There's lots of ways to look at things with relation to opportunity cost. So let's talk about that $100. And instead of putting it under your mattress, you put it to work in a savings account and you received a rate of interest. You'll see on this chart, interest rates over that period of time have been all over the place. But it looks like, just eyeballing it, let's say 4% interest over that period of time every year. So your $100 compounded every year at 4%. At the end of that 100 years, you can see here in this calculator, you would end up with $5,424. Not bad. That's if you took your 100, put it in at 4% interest, it compounded over time. And you compare that to the gold, which is at $10,000. Gold still wins. But it's not that simple, because what about taxes and how do taxes work? On your $100 invested at 4%, every year you would pay taxes. Over this period of time, taxes have gone up, taxes have gone down. Let's just say, keep it simple, that over that period of time it averaged about 25% in taxes. Each year the bank says you receive this much in interest. You put it on your tax form, you pay your 25%. Let's compound that in this calculator. The $100 compounded at 4% while taking out a 25% tax rate over that period of time. You would end up with $1,981. Let's just call it $2,000. What about gold? Well, you can't take your gold and invest it and have a rate of return. Your gold is just sitting there. So what's it worth after this period of time? It's worth $10,000. Well, hold on. What about taxes? Well, this is what's interesting about a commodity like gold. It might be rising in value every year, but you're not receiving a rate of return, so you're not paying taxes on it. So now you've got essentially $2,000 when you invested your 100 at 4% and paid your taxes versus $10,000. Now, when you take that gold and you turn it into $10,000, you will have to pay taxes. The long-term capital gains rate peaks out at 20% right now. So 20% of $10,000 is $2,000. So you would end up with $8,000. So if you paid the long-term capital gains, you'd end up with $8,000. Compare that to $2,000, gold still wins. What if you didn't get the long-term capital gains rate and you end up paying 28% federal taxes? Now you're going to end up with $7,920 after you pay your taxes on the gold when you converted it back. So essentially you're looking at $2,000. It's been compounded, you've paid your taxes, that's what you end up with when you invested that 100 versus the gold, you sold it, you converted it to cash, you paid the taxes at the highest rate, you're going to end up with about $8,000. So there you go. You've got your $2,000 versus your $8,000. Gold wins. It gets even better. As inheritance, If you don't convert the gold to cash and you're sitting there with your 5 ounces of gold and you don't need it for whatever reason, you don't need it to pay any bills, you don't need to convert it to cash, you pass away and you pass it along to your heirs. Well, they will pay taxes if they sell the gold. Now, listen to this. If you sold the gold, your base would be $100 because that's what you paid for it. You sold it and got $10,000. So $10,000 minus $100 is $9,900. You pay taxes on that gain. But in inheritance, their value doesn't start at 100. It starts at the value of the gold when they received it. The fair market value when they receive the gold. So if you pass along that gold, it's worth $10,000. They don't pay taxes until they sell it. But what's the value of the gold to them? The fair market value of when they got it, which is $2,000 an ounce, 5 ounces, $10,000. So your difference was 100 to 10,000, 9,900 taxed. Their difference is 10,000. They turn around and sell it for 10,000. They've made no gain because their basis was the fair market value when they received it. So one thing you can do with gold is keep it forever, pass it along, and it's as if no one's ever taxed. Now, if they held it and it went up in value, well, of course, they'd have to pay the difference of what they sold it for versus the fair market value of when they received it. So there you go. I hope that helps. That is the simplest explanation of how I can explain why they say gold is an inflation hedge, and personally why I diversify, whether it be crypto or gold or bonds or just cash at a interest rate, or stocks with dividends, whatever. I believe diversification is very important, and I hold gold, I hold silver, crypto, and all those other things. You may want to consider that as well. I'm not a financial advisor, but I hope that helps explain why you may want to have gold in your portfolio. Thanks for watching.